So in this problem, we have U-Pick Fruit Corp., which is a C corporation founded many years ago as a U-Pick farm where customers can pick fruit. Strawberry owned 500 out of 1,000 shares of common stock. Her basis in the stock was $1 million. Let's assume that Strawberry is an individual based on the wording. U-Pick Fruit Corporation liquidates after paying all its debts and distributes the following to Strawberry. Distributes $2 million of cash and Berryacre, which was real property used in business by U-Pick Fruit Corporation. The adjusted basis at distribution of Berryacre is $3 million, and the fair market value of distribution is $10 million. All right, so we first determine the consequences of the shareholder when you look at those checklists. First thing we have, Strawberry is the shareholder. So it's going to be, we apply section 331, 336, amount realized minus adjusted basis, which we apply section 1001 rules. The amount realized is going to be the amount that Strawberry actually receives. Here, Strawberry has $2 million of cash, or getting, $2 million of cash. That's what Strawberry's getting, plus the value of Berryacre, which is $10 million. $10 million. So the amount realized totals $12 million. Minus the adjusted basis of the stock given up. Okay? Now, if there's liabilities here, we'd add that in there too, because under the general principles of section 1001, it's all property given up. So here the stock, which has a $1 million basis, and if you have liabilities, that's constructive cash paid. So you add those together. But here we just have stock given up of $1 million. So Strawberry's realized gain or loss is going to be $11 million. $11 million gain, which is going to be both realized and recognized. Now, assuming that Strawberry's held the stock for more than a year, this is going to be a capital gain. So it's going to be long-term capital gain to Strawberry. So those are the consequences to Strawberry. What about to U-Pick Fruit Corp? To U-Pick, we have to do amount realized minus adjusted basis. Amount realized minus adjusted basis. Okay, the amount realized is going to be as if the corporation was selling these assets. Okay, so we have $2 million of cash plus the fair market value of Berryacre. It's either going to be the greater of fair market value or liability relief. There's no liability relief here, so it's going to be the fair market value. So $2 million is the cash plus the fair market value of Berryacre. That equals $12 million minus the adjusted basis of those pieces of property. With cash, it's going to be the same $2 million plus the $3 million basis in Berryacre. So that's going to be $5 million. So we subtract those away. That's going to be a $7 million gain. That's going to be recognized. The character is most likely going to be, okay, well, this cancels out. So there was actually no gain from the cash, as always, right? Face value, basis equal the same. The gain all comes from the Berryacre, which was real property used in business, assuming held for more than a year. That's going to be section 1231 gain to the corporation. Okay? There's one other issue that we have yet to address, and that is, what is the basis that Strawberry takes in the assets? Well, of course, for cash, it's going to be the face value. That's always the case. That's the normal common law principle in tax. But what about Berryacre? So under section 334, the basis that Strawberry takes is always equal to fair market value. Therefore, this amount's going to be equal to the fair market value, which is $10 million.